Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. It will be a busy week. Policy decisions from the Bank of Japan and, of course, United States Federal Open Markets Committee also meeting, with more than 160 S&P 500 companies also reporting their second quarter results. On Tuesday, that's tomorrow, the Bureau of Labor Statistics will release the US job openings and labor turnover survey for the last business day of June. Then on Friday, they publish the jobs report for July. On Thursday, that's the 1st of August, we will get Nigeria July Purchasing Managers Index also coming out. On Wall Street, a rally in major tech stocks hit a wall in the last fortnight of July, with tech-heavy Nasdaq Composite Index notching the biggest one-day losses since 2022. That was last Wednesday, after disappointing numbers from Tesla and Google parent Alphabet. This week, we get results from Microsoft, Apple, Amazon, and Meta platforms, and the results could test investors' appetite to buy based on artificial intelligence hype, despite possible earnings shortfalls. Still, major indices closed positive on Friday. On Saturday, China's June industrial profits grew at a faster clip. That was as businesses navigated a shaky economic recovery. A 3.6% year-on-year rise in profits in June came after 0.7% gain in May, while first half earnings were up 3.5%, accelerating from a 3.4% increase in the January to May period. In France, Transport Minister Patrice Vergret has promised a complete return to normalcy of rail service today, adding that the disruptions that they saw in the last few days did not affect the ongoing Olympics Games event. LVMH is spending big on the Olympics, but another major company has pulled out its advertising. Fed Chair Jerome Powell may signal a September move on interest rates when their two-day meeting ends on Wednesday. This is given the growing risk of imperiling a moderating job market. For US lawmakers, renewing and extending the African Growth and Opportunity Act, AGOA Pact, may be emerging as a tough task, as the very divisive politics may be holding passing the bill hostage. And Ethiopia is planning to float its currency, the birr, as part of ongoing macroeconomic reforms, according to Prime Minister Abiy Ahmed. The announcement comes a day before an IMF meeting at which the Washington-based lender is expected to discuss Ethiopia's request for a new financing program. Egypt also raised prices on a wide range of fuel products 2 days before the IMF conducts a third review of Egypt's expanded $8 billion loan program. Geoeconomic developments all over the world continue to raise fresh concerns. In Nigeria, uncertainty is rife as a planned nationwide protest kicks off on the 1st of August, even as the federal government and many other agencies of government continue to work to see that the impending protest does not materialize or at best is peaceful. Welcome back. Let's look first at the geopolitical and potential power shifts rocking the globe. Israel's Air Force hit Hezbollah targets in Lebanon after 12 children and young adults were killed in a rocket strike while playing football in the Israeli-occupied Golan Heights. Netanyahu on Saturday cut short his controversial visit to the US and returned to Israel as the situation unfolded. Watch out for impact on oil prices and supply chain bottlenecks if tensions escalate. Brussels is today reported to be plotting a two-step trade strategy to deal with Donald Trump, offering the Republican a quick deal if he wins a second term as president and targeted retaliation if he opts for punitive tariffs instead. Former President Donald Trump said over the weekend that he would establish a strategic Bitcoin reserve and would fire Securities and Exchange Commission Chairman Gary Gensler if returned to the White House in November. In an address to the Bitcoin 2024 conference in Nashville, he described the planned steps as part of an agenda that would turbocharge their industry. He's also pushing crude oil drilling and a pledge to reduce taxes. Analysts also point out that Vice President Kamala Harris was one of the few senators who voted against confirmation of Jerome Powell, accusing him of a record of insufficient oversight of the U.S. banking industry. She also headed the White House task force on worker organizing and empowerment, which aims to support union workers. Harris has already been able to mobilize $200 million in contributions towards her bid to emerge as the president come November. Still in the US, Treasury Secretary Janet Yellen said on Saturday that the global transition to a low carbon economy requires $3 trillion in new capital each year through 2050, far above current annual financing, adding that filling the gap is the biggest economic opportunity of the 21st century. Harris is expected to double down on the climate change agenda as opponents seek to stereotype her as too far to the left. Clean energy stocks will be lifted as the Kamala momentum picks up. And in the UK, new Chancellor of the Exchequer, Rachel Reeves, will outline results of an audit of the Treasury today in which she's expected to reveal a £20 billion black hole in the public finances. Her statement promises to be honest about the scale of the financial challenge faced by the new Labour government. The first task for a new chancellor is to win credibility and trust with investors and with voters. She's calling for more powers to be granted to OBR, that's the Office for Budget Responsibility, to make judgments on any major taxation or spending announcements. She also said on Friday that the new Labour government would be the most pro-growth and pro-business the country has seen. Does this mean higher taxes are inevitable to cover gaps that will be blamed on the previous government? In Europe, the largest economy, Germany's inability to generate meaningful growth is casting a shadow over future political hopes for the three ruling parties under Chancellor Olaf Scholz. It's still a year to elections, but a strong anti-incumbency wave seems to be persisting. The unusual geoeconomic environment implies the external context can change fairly quickly, and strategic analysts really need regularly updated scenarios as events unfold. US lawmakers who support a renewal of the Africa Growth and Opportunity Act, AGOA, assured South Africa and other African countries in Washington last week at the 21st Africa Growth and Opportunity Act Forum in Washington that they would lobby for its extension. US senators told the South African delegation led by Trade, Industry and Competition Minister Pax Tau and a host of business leaders that there was a strong desire to reauthorize AGOA, but this process could not be concluded yet. The process of renewal may have been held hostage by the divisive politics. Trump prefers to pick and choose individual countries to deal with, shunning multilateral broad brush trade pacts, and may expect more back from countries like South Africa, seen to be more pro-China, while the Democrats are already sold on the act, even though it has yet to prove it delivered significant gains. If passed, the bill tabled in the US Senate in April would extend AGOA by 16 years, which would see it expire in 2041. Granting the scheme a long extension would also instill a sense of certainty for investors who may want to invest in African countries to benefit from the preferential trading scheme. The last 2 years have seen tensions grow between the US and South Africa over South Africa's perceived anti-US foreign policy, which is one of the conditions which can render a country ineligible for AGOA. And that, of course, has triggered a series of reactions from the US legislature, even at a time calling for a review of South Africa's AGOA status. As the trend towards unilateralism grows, deals like AGOA are at risk worsened by colder east-west relationships and forcing countries to take sides or be isolated. A bigger theme in Africa beyond trade is the pain associated with the reform and dissatisfaction with the governance, which oddly plays to the advantage of many in the US who see Africa as its own worst foe and who argue that trade pacts should not be propping corrupt or at best inept governments. LVMH is one of the Olympic Games' largest benefactors, with a sponsorship deal reportedly worth $166 million. According to reports, the Games raked in $1.31 billion in total sponsorships. That's 60% higher than what it earned at the pandemic-afflicted Games in Tokyo. Like we said in a previous chat, few Olympic outings have come within budget or turned a profit. Paris Games have avoided updating the spending budget of $9 to $10 billion, with the latest estimates reported not to factor in about 45,000 security personnel, compensation for shops shuttered for a week in parts of the city behind police cordons, or the $1.4 billion project to make the sign swimmable. While LVMH is definitely in, a major US tech company has pulled its advertising from the Paris Olympics. On Saturday, Mississippi-based C-spire pulled out its advertising sponsorship following intense backlash over a performance during the opening ceremony that many viewers found deeply offensive. The controversial act involved drag queens and dancers in a performance perceived as a mocking parody of The Last Supper. The International Olympics Committee has apologized, adding it intended no offense. The IMF starting today will review Egypt's progress, also promising another $5 billion in the next tranche of support if satisfied after the review. But some have been asking of late, does the IMF cause fires or does it put them out? Indeed, every country debt situation tends to be unique. In some cases, root causes behind fiscal challenges could be bad leadership and governance, while in others you could have a shock, for example, COVID, or an absence of fiscal buffers throwing finances into chaos. A recent critique of the fund says the IMF should move away from the failed neoliberal economic model and immediately stop imposing outdated austerity policies and constraints to public sector wage bills that undermine urgently needed investments in health, education, and responses to the climate crisis. IMF offers affordable funds but insists on better use of those funds. The IMF is like a bad loans bank. They are brought in to put finances on a better sustainable fiscal position, and perhaps over 50% of interventions will fail. However, to blame the IMF for strategic failures like inability of countries to invest in infrastructure, education, in many cases shows a misunderstanding of the rescue mode of IMF's operations. IMF expects its conditions to be met, reducing cost of governance, asking people to pay their taxes and for services, reducing general subsidies and replacing with targeted interventions to help those unable to pay. No one is forced to meet these conditions or to go to the IMF, and IMF conditions, of course, can be negotiated. The attraction is the huge difference between borrowing at 3% and issuing bonds at over 20%. To blame IMF for failure under poor governance is just ludicrous, and austerity is not always bad. It's a fancy word for cutting your coat according to your cloth. In short, the sooner countries own their own issues and be accountable and disciplined to correct their fiscal excess and stop demonizing the external advisor or surgeon, I think the better. Asia Pacific markets mostly climbed today. Chinese stocks dropped, but Japan's Nikkei 225 led gains in the region after the US inflation report that came in late last Friday raised hopes for an interest rate cut in September. Automaker Mitsubishi Motors, one of the top gainers in the Nikkei index, also said it will join the Honda-Nissan alliance to standardize in-vehicle software. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube. and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.